Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Geopolitics will suck all the headlines this week, but we will focus on how the world's economies are faring. This coming week, we'll have a focus on Australia with the RBA's Tuesday cash rate target review. Everyone expects them to cut by 25 basis points to 3.6%, the more so because they skipped the expected cut at the July 9th review. There will be interest in the NAB business sentiment report this week too. In the US, the economic focus will be on CPI, PPI, retail sales and industrial production data. Market analysts aren't expecting to see much expansion, but they are expecting to see higher inflation. There'll also be another consumer sentiment survey released this week too. In Europe, it'll be all about GDP and sentiment updates. In Japan, we get to learn their second quarter GDP result. In India, the focus will be on inflation updates. In China, there'll be some big data released, including for industrial production, retail sales, and new bank lending. Over the weekend, China released its July CPI data. It rose 0.4% from June to be unchanged from a year ago. They're being suppressed by Beijing's subsidy programs. Food prices fell marginally in the month to be 1% lower than a year ago. Beef prices, however, rose 3.6% on that annual basis. Sheep meat prices fell 1.4%, and milk was down 1.3%. Meanwhile, overall producer prices in China deflated quicker, down 3.6% from a year ago. Producer purchase prices were down 4.5%, taking it to almost 3 years of continuous monthly declines. That is serious deflation. More globally, the July World Food Price Index inched higher, but that masked record high prices for meat proteins. And those were driven by beef and sheep prices. Dairy prices eased back from June, but only slightly, and they remain very near record levels. And Canada released its July labour market report over the weekend, showing 1.6 million people unemployed for a jobless rate of 6.9%. That's high, even if it is stable. And the number of people employed fell by 40,800, with a drop of 51,000 in full-time jobs and a rise of 10,000 in part-time jobs. The decline was mostly amongst the 15 to 24-year-olds. Markets had expected overall employment to rise by 13,000. In Japan, June data for household spending rose 1.3% from the same month a year ago, down sharply from a 4.7% increase in May. Forecasts for a 2.6% rise. Households were worried about the impact of US tariffs and persistent inflation on consumer activity. On a monthly basis, spending plunged 5.2% in June from May, reversing May's 4.6% rise and undershooting expectations of a 3% correction. And staying in Japan, they agreed with the US on a 15% reciprocal tariff. But Trump issued an executive order to charge 25% in a peak of retribution for slights no one can quite understand. The Japanese have called them out on it, insisting they honour the negotiated deal. Now Bessent and Lutnick have agreed to not only correct the administrative mistake, but refund the capricious tariff charges. The Japanese are back with the same deal that the EU has. And Taiwanese export performance continues to astound. Exports from the island nation surged 42% in July from a year ago to a record $56.7 billion, following a 34% increase in June. They're expecting only a 29% rise on this basis. By any measure, this strength is quite remarkable, and it is all built on electronics. Taiwanese imports were up 21% on the same basis too. In the US, the appointment of Stephen Moran to fill a temporary vacancy as a board member of the US Federal Reserve adds in a protectionist skeptic to the policy and voting mix. He is no fan of central bank independence, but oddly, he has railed against the revolving door of its members moving between the White House and Treasury positions and the Fed governorships. He has now become Exhibit A. And global reinsurer Swiss Re says 2025 is shaping up to incur weather and climate losses exceeding $150 billion after a record $80 billion in the first half. That would make it the costliest year since 2011, when the New Zealand and Japanese earthquakes occurred, but by far the costliest for just climate impacts. And we should note an AFR report that French dairy giant Lactalis is the leading bidder for Fonterra's mainland business after being granted exclusivity to negotiate for a buyout. They got the nod with a price rumoured to be something less than $4 billion. And the US Treasury 10-year yield is now at 4.28%, down 1 basis point from Saturday, but up 6 basis points for the week. And the price of gold will start today at $3,398 an ounce, up $3 from Saturday. But that has built to a $51 gain for the week, or up 1.5%. The uncertainties swirling around the new US tariff ruling are flowing through the New York gold price. Meanwhile, the White House has called the news misinformation, even though it was their agency that had published the tariff ruling. American oil prices have slipped back again, down 50 US cents to be just under $63.50 a barrel, while the international Brent price is just over $66 a barrel. These are more than $3.50 lower than week ago levels. And the Kiwi dollar is now 59.5 US cents, down 10 basis points from Saturday, but up 0.5 cent from a week ago. Against the Aussie, we're up 10 basis points at 91.3 Australian cents. Against the euro, we're unchanged at 51.1 euro cents. That all means our trade-weighted index starts today at just on 67.3, unchanged from Saturday and up 20 basis points from this time last week. And the Bitcoin price starts today at $118,561 and up 1.5% from Saturday. Volatility of the past 24 hours has been modest, at just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.